We're about 5 years from the onset of the worst financial crisis in either of our lifetimes. And a lot's been done to try and renovate the regulatory system, shore up the foundations of the banks. Do you think enough has been done to minimize the risk of ever having to do this again?
Well, great progress has been made, but the work continues. Of course, Dodd-Frank was the seminal piece of legislation in reaction to the financial crisis. We think, and I think that directionally Dodd-Frank is appropriate. We think it could be improved and tweaked some, but it's the right direction. But much work remains to be done. The law was passed, but a lot of the regulations that the law envisions have not been finalized yet.
And I think there's a certain debate going on now. There's one camp that says we didn't do enough. We still have too many big banks. They're maybe too big to fail. They may be too big to manage. That's on one side. Some of them are your members. Do you think there's something to that?
Well, people should keep in mind that we need all size banks. We need small community banks for various reasons, localized reasons, and certain types of lending, same with mid and regional. But we also need some large banks that can participate in global transactions and these large global deals. And if we don't, then we're just taking ourselves off the playing field and relegating those opportunities or giving those opportunities to places like China or Europe or Brazil. So we want to have some globally capable banks. And with that in mind, we should keep in mind that there's 30 or so largest global banks. Only about 5 of them or so are in the United States. So we don't have a massive presence globally, and we'd be, I think, ill-advised to shrink that.
But the Roundtable has made the case that you don't want to see any more bailouts. That you'd like to have a system where if some bank gets into trouble, the government can let it fail and that we don't bail out the bondholders and the shareholders. Are you confident that what we've set up is sufficient so that if a big bank got into trouble, we could let it go this time and not repeat the AIG or the Bear Stearns?
Yeah, the Roundtable's view, and my view, is nobody should be too big to fail. Nobody should get future bailouts, and Dodd-Frank addresses that very specifically. It prohibits future taxpayer bailouts, puts a mechanism in place to have an orderly wind down of these large institutions if they fail without taxpayer bailouts. Now, there's some who say, well, but I'm not sure, I'm not guaranteed that there won't be a bailout because some future Congress might change their mind. Well, that's a different issue, but keep in mind, regulators as we speak are continuing to try to address these issues to minimize the chance, A, of failure, or B, that there would ever need to be a bailout again, and there certainly shouldn't be.
Now, on the other side, you see effort from the regulators, who seem to be much more active than the legislators these days, in asking the banks to hold more and more capital and to put more and more constraints on. And one sometimes hears a concern that this is crimping the amount of credit that's available to business and consumers. Do you think they've gone too far in that direction?
Well, there's a trade-off, of course, because if you require banks to have ultimate security, 100% security, and hold all of the money, then they wouldn't be able to do any lending. You just have a pile of cash. And so as we ask them to do the type of lending we need to stimulate and grow the economy, you have to be able to take on some increments of risk. The latest actions by the Fed, and of course with Basel III coming increasingly online, puts the largest banks at a point where they're saying, look, this is getting to the point where it is impinging credit. And in fact, there was one estimate that just the recent incremental changes by the Fed will cost the economy over $90 trillion approximately in decreased lending.
So your point is that they already have gone too far, or they're at risk of going too far?
Well, I think they're at the point now where they're saying this is as far as it should go, and any more would impinge lending.